Hello, in this video we're going to go over a topic that we've been asked about. We've touched on it in some of our videos just in general as a guideline, but we wanted to make this video to go into more detail about this particular topic. And that topic is there, if you're inclined to take a trade off of the opening 9:30 a.m. candle, is there an instance or are there instances where you would avoid taking that trade even though the opening candle closes below the bull bear KPL or the 9:30 a.m. opening candle closes above the bull bear KPL, which is typically the play that you'll see that most often happens in the first opening moments of the session, including the opening candle, where the bull bear KPL price is the most prominent level that is in play. That if you're going to take a trade, especially off of the opening 9:30 a.m. candle, that is typically the level that you're going to take either the bullish or bearish trade on, depending on whether it closes above the bull bear KPL or below the bull bear KPL. And what we're looking at now is we've gone back to the September 2nd session this year. So this is September 2nd, 2025 of the SPX. So this is an example of an instance in which there would be an exception to that, which you would want to watch out for. This sort of thing happens just a few times a year. So, there's about 250 or so trading sessions in a year, depending on what holidays we have. It's approximately 250 trading sessions in a year, and you'll see something like this happen typically a couple of times a year. So, in this instance, you will see we're on a 2-minute chart, and that is the time frame that we show on all of our videos, because for this particular trading strategy that we utilize and show to people on our YouTube channel as the primary strategy to use with this indicator, which includes if you're going to take a trade off of the 9:30 a.m. opening candle, that depending on whether it is a close, if that candle closes below the bull bear KPL, you take that's a bearish entry signal if you're going to take that trade. And if the opening candle closes above the bull bear KPL on that opening candle, then that is a bullish entry signal if you're going to take that opening candle trade. So as you can see in this instance, on September 2nd, we had a large gap down from the previous day's close up here, and the price and the 9:30 opening candle did open above the bull bear KPL, and it crossed below and closed below the bull bear KPL, which normally that would be a bearish entry signal on this 9:30 a.m. candle if you were going to take a trade off of the 9:30 a.m. Opening candle. However, in this instance, as you can see, the close of the candle has exceeded past the S1 level. And in fact, it closed even slightly below the S2 level. So this is a monster candle, a monster gap down. As you can see, even though it did start above on the open, it traveled far outside the S1 level. So we've touched on this in a couple of our videos. We don't do it every single video, but in a couple of the videos that we've made, we've gone over that if you ever see an instance where the opening candle closes below the S1 level, or it closes above the R1 level, and we're specifically talking about the opening candle here, the 9:30 a.m. opening candle on a 2-minute chart, then in those instances you do not want to take a trade at all. And that also includes taking a trade off of the other levels on that opening candle. So instead, what you do is you do not take a trade on the opening candle, and you instead wait for succeeding candles to then make a determination of which main R level or S level that you want to take a bullish or bearish trade on. So the main point here is that if you are inclined to trade the 9:30 a.m. opening candle, if you ever see an instance of this where the candle is closing below the S1 level, or that opening candle is closing above the R1 level or further, or below the S1 level or further down, then you do not take that trade off of that opening candle. You instead wait and then evaluate based on price action whether you're going to take a trade off of the succeeding candles based on another level. So again, if we saw the reverse of this here, let's say that, and it doesn't matter that it opened above and then traveled below. It could have opened below and also traveled below. The main point that you're looking for, or the main focus is this opening candle closing below the S1 level, or is the opening candle closing above the R1 level? Because in that instance, it's too far removed from the bull bear key price level to take a trade based on that close above or below the bull bear key price level. And thus the stop losses that you would normally use, because they're associated with a trade taking off of that 9:30 a.m. opening candle, there's too much risk because they're too far removed from where the candle is. So that's why you avoid it. So whether, just to hammer this point home one more time, the main point is where the 9:30 a.m. candle closes. So it could open above, it could open below, but if it ends up closing beyond the S1 level, below the S1 level, or it closes above the R1 level, and we're specifically talking about the opening 9:30 a.m. candle on a 2-minute chart, then you would not take that opening trade. You instead are waiting for price to play out, whether that price playing out is the very next candle or the next few candles, or perhaps you're waiting an hour or 30 minutes or whatever. But if you are normally inclined to take the opening 9:30 a.m. candle trade, this is an example of the instance which you avoid that trade, even though it normally meets the entry rule of it's closing below the bull bear key price level or closing above the bull bear key price level, because it is too far removed from that level in order to take a trade based on that level. Okay, so we do have other videos on how to take trades off of any of the main R levels or S levels as well. So you'll also see a link in the description of the video for other topics, including that, as well as the 2 different types of trade entries to look for, which are standard trade entries versus conservative trade entries, which take additional confirmations, and how to recognize those on both bullish and bearish trades, what are the differences between the two, and how to recognize them. All right, so thank you for watching this video, and we wish you much prosperity in all your future trading endeavors.